Gold closed today at $5,140.07, down from the $5,400 all-time high, down from Friday's close. And I'm going to tell you exactly why this pullback is not a warning, it's a setup. Welcome to Golden Horizon. The weekend in 60 seconds. Here's what happened while the market was closed. On Monday morning, gold opened with a decisive upside move as stagflation fears, geopolitical stress, and a deteriorating U.S. labor picture converged and then reversed hard. That intraday reversal shook out weak hands. Good. That's how clean setups are built. The war is still live. The Strait is still closed. A nightmare scenario is looming as global markets head for what top energy analysts are calling the biggest oil output disruption in history. Nothing about this weekend was de-escalation. That was position management, not thesis breakdown. What's actually driving the pullback? Here's the insight most people will miss. Oil and yields are now moving in the same direction, a rare anomaly. Normally, gold benefits from two distinct tailwinds: falling yields, which reduce the opportunity cost of holding gold, and rising oil prices, which drive inflation hedge demand. If oil continues to spike and yields rise with it, both of those tailwinds can compress simultaneously. That's the technical reason for today's pressure. It's not a structural break, it's a compression before the next leg. The three signals I'm watching this week. Signal 1. CPI on March 11th. This is the number that matters most. High volatility in gold prices is expected this week amid the release of U.S. Consumer Price Index data for February. Oil was above $80 through all of February. That means CPI runs hot. A hot CPI with an active war means the Fed is completely trapped. They cannot cut into an inflation shock. According to CME Group, 95.6% of market participants expect rates to remain unchanged. Keeping borrowing costs at current levels removes one of gold's only remaining headwinds. If CPI surprises to the upside, gold breaks back through $5,300 by Wednesday. Signal 2. The Strait of Hormuz. Every day it stays closed, the oil supply shock compounds. This is not a resolved crisis. This is a managed one. Watch for any official timeline from Iran's Transitional Council. That's the release valve. Signal 3. GDP data on March 13th. The U.S. will release its fourth quarter and full year 2025 GDP estimate on March 13th, alongside the University of Michigan's 5-year Consumer Inflation Expectations Index. Weak growth plus hot inflation is the stagflation confirmation. That combination historically sends gold up and keeps the Fed frozen. The exact levels for this week. Gold closed at $5,140.07. Key support levels sit at $5,052 and $4,099.66. Key resistance levels are 5,208, then 5,266, then 5,320. We're right at the decision point. My buy zone is 5,050 to 5,150. That's the technical support band. That's where institutional buyers have stepped in consistently during this conflict. If gold pulls to that zone on any dollar strength or de-escalation noise, that is the entry. Not a panic, that's the setup. Stop loss below $4,980. First target, $5,300. Second target, $5,426, the all-time high. Third target, if the Strait stays closed through March, $6,000 and above. Bull case versus bear case. Bull case, CPI hot on Tuesday, Strait still closed, GDP weak. Gold through $5,300 by midweek. Projections put gold reaching $52.55 by end of March and $60.16 by summer. Bear case. Trump announces a diplomatic channel with Iran's interim government. A Strait reopening timeline goes public. Gold fades toward $4,900. A pullback is most likely if Middle East tensions cool and U.S. yields stay firm. Right now, the market is not betting on the bear case. Zoom out. Central bank net gold demand hit 230 tons in Q4 2025 alone, finishing a year of durable buying activity even as prices hit record highs. Global physically backed gold ETFs posted a record month in January 2026, with $18.7 billion of inflows. The structural bid is real, the trend is intact. 5140. War alive, Strait closed, Fed trapped, CPI on Tuesday. This isn't a moment for all-in. This is a moment for disciplined, staged entries into a confirmed bull trend. The chart knew before your newsfeed did. It knew in January, it knew in February, and it's telling you something right now. This is Golden Horizon, where macro meets metal. Subscribe, hit the bell. We're back Tuesday night with the live CPI breakdown. See you on the other side.